Hello and welcome to the Gold and Silver Club weekly commodities review in alliance with ACM Gold, presented by myself, Phil Carr and Nick Cowsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. During the live session we will cover an end of week summary for gold, silver, oil, natural gas and the commodity currencies. We will be looking at the top trades of the week, live market commentary and technical analysis, as well as looking at the week ahead, so key events looking forward, and of course answering any of your questions on today's webinar too. So the gold price in ZAR this week, we have seen the low of the week. We hit midweek, and we can see after the Janet Yellen, the conference yesterday where Janet Yellen was in Congress, we can see that that was very supportive for the gold price yesterday towards the end of the week. We will look at the gold price very shortly. In fact, right now we are trading at $1,286 per ounce.
A little bit about the Gold and Silver Club. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me on the call is Nick Cowsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, the mindset and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial television. Okay, we're going to take a look at the gold price this morning. So currently this morning gold is trading at $1,281 an ounce. So slight pullback on yesterday's spike high during the Janet Yellen speeches. So we'll take a look very shortly at the markets. Before we do so, we're just going to take a look at seasonality and get an idea of where we are right now. So at the moment, we are in mid-November, and this is typically a time when we do tend to see the markets hit a bottom for this pullback, which you see currently. So we did see that last week. We hit around the $1,260 an ounce level. So this is going to be potentially a bottom of for gold right now, leading into the Santa rally, which we can discuss certainly in more detail on future webinars as we get towards closer to Thanksgiving, certainly next week. So we'll be looking out for potential signs that we are going to be able to come out of this dip at the moment, this pullback in gold, and we'll do that when we have a look at the charts. And looking at the US dollar index at the moment, the US dollar index, it did rally up to around the 81.5 level. That is from last week's from non-farm payroll. We have seen some choppy movements this week. We did see some, at the beginning of the week, we hit some short profit targets we've been looking at. We'll talk you through our top trades very shortly. At the moment, the US dollar index is, this morning, it did get some moves to the downside yesterday when Janet Yellen was speaking, and just having a look at the moment, we can see that speaking in Congress, we can see at the moment that the gold price currently is being supported right now. We did see a big spike to the upside yesterday as the US dollar index was declining, and I will talk you through that very shortly on our correlations. Okay, so let's take a look at the top trades of the week. So the top trades this week using the Gold and Silver Club signature trading strategies are as follows. So from non-farm payroll last week, you may remember we were looking at this very key level, $1,300 and $6 per ounce was a very key level of support for us on gold that we were looking to see if we would break that during the non-farm payroll announcement. We did actually break that. It was an opportunity to short, and we came down to a low of around 1280 on Friday, non-farm payroll in the afternoon. However, 1277, our profit target on this, was actually hit on Monday. So the profit on that was 290 points. So the risk was 60 points, so $600 risk for each lot traded, for a profit of 290 points, $2,900, for a 5-to-1 risk to reward. So we had a very tight risk on that sell short opportunity and came down and hit a 5-to-1 from Friday to Monday. WTI oil, we've had some nice opportunities. We're actually looking at this last Friday. If you joined us for last Friday's webinar, we were at a key level of support, but not only that, a very important trend line as well. So we had a cluster of Fibonacci's and a trend line. So from this initial very hammer candle, a bullish candle on the 4-hour, we actually had confirmation of that, and we had a nice rally over the course of Friday afternoon. We spiked up to 105.20. We're just above that, but our profit target was 105.20. So the profit on that trade was 145 points, a risk of 47 points, so $470 risk for 145 points profit, for a nice 3-to-1 there on WTI. Australian US dollar, this also presented us with a nice sell short opportunity on Friday and also Monday. We broke through a very key level of a key Fibonacci level on Friday, and also closed below the key 50-day moving average on Friday, and our entry there was 0.9371 on Monday, as we continued again to break down below this key level, and we are very tight risk on that trade. 20 pips risk for $200 risk on that trade for each lot traded, for 71 pips profit, for $710 profit for each lot, for a 3-to-1 on Australian US dollar, coming out at 0.9300. New Zealand US dollar, this was a trade opportunity that we had midweek. We just looking at the 4-hour time frame here, we had a really nice dragonfly doji appear at a major level of support, a level where we had some key Fibonacci levels as well. The risk on that trade was 35 pips, entering at 0.8232. So each lot traded $350, and the reward on that was 110 pips, so $1,100 profit on that, for a 3-to-1 on New Zealand US dollar. And finally, we had gold. This was actually yesterday's nice setup that we had. We had a nice hammer which bounced off a key level of support, so 1277 level, key Fibonacci level, which was actually our profit target for shorting from the break of last Friday's 1306 support. So that is now previous support was found again this week at that key level. So entry there at 1,285 once we had that nice confirmation of a buy opportunity, and just came out the next Fibonacci level, 1,294. So for a profit of 90 points. So each lot traded, the risk there was 50 points. So each lot traded $500 risk to make 90 points. So $900 profit for a 2-to-1 on gold. So, guys, those are our top trades of the week using the Gold and Silver Club strategy. So what we're going to do today is we are just going to take a look at the live markets, and let's move across to my screens, and we will see what opportunities that we have today. Okay, perfect. The first market we want to turn our attention to this morning is going to be Brent crude oil. Now, Brent had a tremendous run last week, actually since last Friday, since we came and we found support at the 103.72 and 103.38 levels. If I just zoom out a little bit here, you will see those were also major levels. This is a major trend line too, going back on the weekly time frame. So we found support at those key levels last Friday. We have had quite the rally since then. We've moved actually to the upside over 500 points since last Friday. We've broken through a lot of key Fibonacci levels here, and we have actually found resistance just yesterday. You can see here we've got 1, 2, 3. This is the fourth bounce off a major trend line here on Brent, which has been in play since around about mid-October here. So we have had a really nice opportunity to swing trade this, and we just came up to profit target on this just yesterday, in fact, finding some resistance here, the 50-day moving average on your charts on 108.43. 108.43 was a very key level and still continues to be a key level for Brent. So we can see there's an inverse hammer at the moment developing around about that Fibonacci level. We'll just take a look at the 4-hour time frame here. We can see there is certainly some indecision around that 108.43 level. We are going to be monitoring that to see if we're going to get selling opportunities to just come back down within this overall downtrend here. We've still got more work to do to break out of this downtrend. I would like to see the market break out of this downward trending channel here. So I'd like to see us break above 109 and start making a move to the upside here, to coming up to back up to around the 111 level, and then that's going to be the next key level to test there. Or we may just see a move lower here. We could just see the market come back and fall back within this downward trending channel. So for me, definitely Brent is going to be one to watch this morning. In terms of the short side there, that is a pretty good risk to reward really for how far it could fall down. So we'll definitely be monitoring that. Looking at WTI, WTI did present us with a really nice day trade opportunity just yesterday actually for 120 pips, just as it came off a major level of support down here and also came off a major trend line. So very similar to Brent, except Brent and WTI are very strongly correlated. So the fact that Brent was breaking out yesterday and WTI was still looking weak, it didn't take long. It was about half an hour lag time after crude oil inventories until WTI suddenly started to pick up some really strong momentum here. And we had a really nice trade just up to 94.88 there from a bounce off this key level of support. So we are just consolidating at the moment on WTI at the moment. So we want to see what we're going to do here. We seem to be finding some resistance. Just got a box of consolidation which is forming on WTI at the moment. So we definitely want to see how the market is going to, if it's just going to come back down here and kiss the 93 level again, how it's going to react if we do see it test this major level of support. If WTI does come down and do that, we could expect Brent to do the same. Or if we can get some support here for oil and we can break out above really these levels of resistance, above 94.88 and particularly above 95.60, then we could start to really start to carve a bottom out for WTI and be online for some quite hefty swing trades here, because you can see that Brent has managed to get all the way to its 50 MA. So that would represent about another 600 points to the upside for WTI. So I would definitely be looking at Brent and WTI at the moment for these potential setups. Also wanted to, we had some requests about this, just quickly take your, we've had some of our traders do some exceptional trades this week on copper using our strategies, and we just wanted to talk through what we're seeing at the moment on copper. So copper has provided a lot of good sell short opportunities over the last 2 weeks, and we've broken down and we've come down to test a key fib level 3.1401. So I will be looking to see whether we're going to break that level. You can see if we break that level, there's not much support until we get to the next Fibonacci level just below at 3.08. So I will be looking at that, guys, as a potential setup now for a breakdown of that level of 3.1401. You can see all the moving averages are all trending down. So more likely we're going to get a break to the downside as opposed to support. So keep an eye on that for those of you who do trade copper. I know we've had a lot of interest in that recently because it's given a lot of opportunities on the sell short side. Looking at gold, I'll take you to my my chart with all the fib levels in a sec. I just want to show you the overall trend for gold. We are still very much in a downward trend for gold. You can see there's key levels of resistance which have been with us now for since pretty much September 2012. We've followed this downward trending, this resistance channel for gold. We did find some horizontal support this week around 1260 level, and this is where we want to see whether we are going to see seasonality kicking and whether this is going to be the low for the time being for gold as we start to, seasonality bias would dictate that gold should be starting to pick up now in mid-November. So we did get some lift, obviously, from Janet Yellen. Her comments this week have caused a nice spike to the upside in gold, and we came just shy of the 1300 level. So we are starting to let's have a look on the daily here. Let me take you back to my Fibonacci levels. We give you a better idea. Just going the 4 hour. So on the 4 hour here, we are starting to just consolidate here between 1260 to 1294. So I'd like to see a breakout in either direction, to be honest. I think we're going to get a lot of stop losses triggered and pending orders triggered and a break of either level. So 1290, you can see we've got the key levels here. 1295 is going to be a key level for the longs to start getting more interested. Probably a break up to 1306 and then 1321. These are all the key levels that you need, really. And then a break below 1277, I would say we're just going to come down and hit 1260 again and 1251. So that's what we're looking at right now. Gold, wouldn't be surprised to see it come down and retest 1277, just kiss that level and potentially bounce off again back up to 1295, or if we break that, next support 1260. So on the tighter time frames, that's what we're looking at. In terms of silver, silver's been a bit weak this week. It's not responded as well as gold, actually. Silver has been more in line with copper, which both of them being more industrial metals. So we will take a look at that. So you can see on the 4 hour here, in fact, this is the daily, looks like a 4 hour because of the way it's just consolidating there. You can see the volatility. The daily pips that this market moves isn't huge, in all honesty, so it's better suited for swing trading. 43 pips there as opposed to gold, which moves about 200-300 pips a day, or base points. So if we have a look at what we're doing at the moment with silver, we're just consolidating here. I think if we do get a break below the 2040 level here, the weekly low, we could see some more downward pressure there. There's not really too much to support silver here if we continue down until we get to about 1982 just below. So it could be a quick 40-point move to the downside. If we're starting to form a consolidation here on silver, here is the consolidation that we're forming. So a breakout to the upside here. If we start seeing some breaks above 2080, we might see a move back towards the 21 level, 2157. So we'll be monitoring that for silver. I think gold's going to be, gold and oil are really the ones to watch this morning, and to give you more lucrative trades, particularly WTI crude oil right now. Let's have a look at the commodity currency. So Australian US dollar has given us some really nice day trades this week, been very predictable in terms of it's just been channeling again, had a nice sell short midweek on this, just taking it down to support, and then another opportunity to go long again yesterday, and looks like another sell short again. So it's just consolidating, but there are nice trades to be had, quick in and out, whilst it just consolidates within this particular range right now between two key Fibonacci levels. On the daily time frame, you can see we also just have a consolidation right now. So the consolidation that we have here is between the 0.9376 level, just above, and going down to about 0.927. So interesting to see where we're going to break on this. We're going to break to the upside or the downside on Australian US dollar. But whilst it stays consolidated, the 4 hour time frame offers nice day trade opportunities. Looking at New Zealand US dollar, same situation. We've had nice opportunity here, you know, as we bounced off some key Fibonacci levels to go long, and then also we had a indication to go short and long. The overall trend on the 4 hour is more to the upside at the moment. It looks like New Zealand US dollar does want to break out from here, wants to break above the 0.830 level. You can see we're starting to form higher lows, and we've got this this horizontal resistance here. So looking at the daily, we're right around the cluster of Fibonacci level. So there's an indecision in the market at the moment. We did come down and we retested the key level again, the key 0.81768, which we discussed last week actually. This level was important. Also 200-day moving average is at that level. This is where the market found strong support on New Zealand US dollar, and it's really struggling to break below that. So there's a lot of buy orders which come in when the market gets to around 0.81768. That's a key event area at the moment for New Zealand US dollar. So I will be monitoring that more again on 4 hour time frames, more interesting, because we're seeing some nice opportunities to just trade within that range. And looking at USD Canadian dollar here, USD Canadian dollar, again, you're going to get more. Actually, let's go out to the weekly. You can see the overall uptrend that we do have in USD Canadian dollar on the weekly time frame here. The upper end of this trend channel would take us to around about 1.0656. So I would be biased to the upside at the moment. Any sell opportunities right now on USD CAD appear to be short-lived. There seems to be quite a lot of buying in this market. We do just seem to have a continuation you can see there is an uptrend on this market, and USD Canadian dollar still way above all of its key moving averages. We are seeing, if we're going to the 4-hour time frame, there are opportunities just to trade the consolidation at the moment. So when it comes down, hits key Fibonacci levels which are supportive, and also other ones which are providing sell short opportunities as well, based on the Gold and Silver Club strategies. You know, there's some quick wins here on USD CAD whilst it stays consolidated. So in summary, the key markets I'll be looking at today, definitely Brent. I'm going to be watching, see how this downward trending trend line here, how if it holds as resistance today, because there's a lot of pips available in this short trade. So that will correlate to WTI if we start to see WTI come down. In fact, I'll just bring up, looking at gold at the moment. This is the US dollar index here on the candlestick chart, just correlated to gold here as well. So we're going to be following this closely. US dollar index is consolidating there a little bit as well. This is why a lot of the commodity currencies are consolidating too. The US dollar index is just got a lot of indecision here, and obviously USD CAD, so CAD is paired against US dollar, Australian dollar is US dollar, so we've got US dollar index in there, US dollar there as well, and New Zealand US dollar. So all of these markets which are experiencing just consolidation, it's due to the US dollar at the moment, which is undecided. It's hanging around the 81 level. So if we just stay consolidated here, there are day trade opportunities to trade on tighter time frames. You can see gold here. If we do get strength in the US dollar, gold is going to head lower. I mean, you can just see, even with a line chart, the overall trend here on gold, where you've got lower lows forming lower highs. So we'll see if we're just going to come down, and we're going to reach, if the US dollar index is bullish today, if we see moves to the upside after the US Open, which will be in about a couple of hours time, if we see US dollar index climb, that will be push gold down. If we see the US dollar index decline, we do just about seem to have a lower, let's have a look, we're on the daily at the moment, we do have lower highs here, so if US dollar index does come down today, that will be supportive for gold. So I've just got here the US dollar index on the candlestick chart, and this is the black lines here are gold overlaid with gold, so you can see that very clear inverse correlation there, which you want to be keeping an eye out for today. Okay, so gold and oil definitely wants to watch for more swing trades here, well, oil especially, and you want the to be looking at the commodity currencies for more range-bound trades today.
And now moving on to the week ahead, so key events looking forward. So next week, the key events we want to keep an eye on are 3:30 p.m. Central Africa time is going to be the US CPI. That index measures the change in the price of goods and services, excluding food and energy. The CPI measures price change from the perspective of the consumer. It is a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. That will be important for your gold and silver trades, which are inversely correlated to the US dollar. Next Wednesday at 5:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have US crude oil inventories. That will definitely be affecting your crude oil trades. That data reports the number of barrels of crude oil commercial firms have in inventory. Commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil. A lower than expected reading should be taken as bullish. Very important for your crude oil trade. So next Wednesday, 5:30 p.m. Central Africa time and 10:30 a.m. Eastern time. Next Wednesday, this is the key one, we have the FOMC meeting minutes. That's at 9 p.m. Central Africa time, 2 a.m. Eastern time. The FOMC meeting minutes from October will be released, providing in-depth insights into the economic and financial conditions of the US, which influence the FOMC vote on where to set interest rates. So the minutes are likely to create volatility for the USD and commodity prices. Then next Thursday, 21st November, we have the US PPI. The Producer Price Index measures the change in the price of goods sold by manufacturers. It's a leading indicator of consumer price inflation, which accounts for the majority of overall inflation. So a higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. So very important because of the inverse correlation to gold. That's at 3:30 p.m. Central Africa time, 8:30 a.m. Eastern time. Next Thursday, very important for your gold and silver trades, is the Thursday 21st November, 5 p.m. Central Africa time, 10 a.m. Eastern Time is the Philadelphia Fed Manufacturing Index. That index rates the relative level of general business conditions in Philadelphia. So a level above 0 on the index indicates improving conditions, below indicates worsening conditions. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. And then next Thursday, 21st November at 5:30 p.m. CAT time, Central Africa time, and 10:30 a.m. Eastern time, we have the US natural gas storage. That's going to be important for your natural gas trades. The Energy Information Administration, the EIA natural gas storage report, measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So while this is a US indicator, it tends to have a greater impact on the CAD due to Canada's sizable energy sector. And that's important because the CAD is of course correlated to oil price. And of course, if you would like to take your trading up to the next level and find out more about our exclusive live trading room program, you can get in touch with us very simply. To request information on the Gold and Silver Club live trading room and coaching programs, go to www.jointhegoldandsilverclub.com or contact us at our Johannesburg office +27 11 083 8403, or just email us at office@thegoldandsilverclub.com. And do of course take advantage of our weekly newsletter. So at thegoldandsilverclub.com, and you will see free weekly gold, silver, oil, commodity currency news, live market analysis and prices. So do take advantage of that too. And of course, if you do want to get in touch, here are the details for you to get in touch with the Gold and Silver Club. Okay guys, so with that, we wish you good luck for the rest of the week's trading, and we will catch you back here same time next week. So that's a wrap for us today, and we'll see you on the next one. Take care guys. Bye-bye.